Level 1, $30,000. The refund is the biggest check you'll see all year. The IRS took it out of every paycheck before you ever saw a dime. If you ask why, they will tell you that they didn't take your money, they withheld it. You didn't get to decide. The money was income for 1 second on a pay stub and gone the next. Now, in February, they give some of it back and call it a refund, like a gift, like they did you a favor by returning what they borrowed for free. You file with software that asks if you want the money faster for a fee. You do. You always do, because the refund is already spent. The car repair, the back rent, the month you've been carrying on a card. You claim the credit built for people who work and earn little, the one made for exactly where you are. Then the notice arrives, a letter, automated, no name at the bottom. It says there's a discrepancy. It freezes the refund while it checks. There's a number on the letter, and the number loops you through a menu that ends in a Q that ends in a tone. You are one of the easiest people in the country to audit. Not because you cheated, because you can't fight back, and the letter costs the agency almost nothing to send. You feel something that isn't anger, just tired. You wait. The money you planned your spring around sits frozen over a number you don't understand and can't dispute with a human. The IRS doesn't see a person at $30,000. It sees a refund it hasn't decided to release. You're not a taxpayer it's chasing. You're the easiest target. Level 2, $60,000. You file in 20 minutes. Standard deduction, 1 W-2, a refund smaller than last year's because you finally tuned your withholding taxes and stopped giving the IRS a large interest-free loan. The return goes in and the system swallows it without a sound. No notice, no letter, no discrepancy. This is the safest you will ever be from the IRS. The audit rate at your income is almost nothing. Not because you're trusted, because there's nothing to find. Your employer reported every dollar you made before you did. Your income arrives pre-confirmed. There is no version of you the IRS can't already see, which means there's no reason to look. You are a wage with a name on it. The tax came out before the money reached your account. In even amounts, twice a month, so smooth you stop noticing the gap between what you earn and what you keep. You don't negotiate that gap. You don't time it. You don't decide when a dollar becomes income. It becomes income the instant your employer says so, and the tax leaves by the time you breathe a sigh of relief. You're not invisible because you're trusted. You're invisible because you've already been drained. The IRS doesn't audit you at $60,000. It doesn't have to. You paid before you filed, and the system tracks every penny. Level 3, $120,000. You got a raise, but your paychecks barely went up. For the first time, the phrase marginal tax rate means something, because the last dollars you earn are taxed harder than the first. You have a brokerage account now, a few hundred in dividends. A 1099 arrives in the mail beside the W-2, and the two of them have to agree. 1 year they don't. The brokerage reported a sale you forgot to enter. The same automated letter that froze a refund at $30,000 finds you here. A proposed amount due. No human, no name. The difference is what happens next. At $30,000, the letter was a wall. At $120,000, it's a chore. You log in, upload the form, reply, and it resolves in a paragraph. The machine that punishes the poor merely inconveniences you because you can produce the document it wants in an afternoon. But the shape of you hasn't changed. The money still arrives as wages. The tax still leaves first. You still don't decide when a dollar becomes income. Your employer does, twice a month, and the withholding follows it out the door before the money is yours. You're not wealthy at $120,000. You're a larger wage, taxed at a steeper angle. The IRS sees you exactly the way it saw you at $60,000. Collected first, asked later, it just collects a bigger number. Level 4, $250,000. A new tax attaches itself to you like a parasite connects to its host. You'd never heard of it before. It's called a surtax on investment income that only exists above an income threshold you just crossed. The IRS built a separate rule for people who earn the way you're starting to earn. You hire someone to file for you. The first year, your taxes stop being a form and become a project. There are choices now: when to sell, when to hold, and what to call a thing so you can pay the least amount of taxes possible. You write quarterly checks, estimated payments, because not all of your income runs through a payroll that withholds for you anymore. And writing those checks does something to the relationship. The money isn't taken before you see it. You see it, you hold it, then you remit it on a schedule you manage in amounts you help decide. It's a small shift and an enormous one. At every level below this, the IRS took first and let you keep the rest. Now you pay, which means for the first time there's a gap between when the money is yours and when the government's share is gone. And inside that gap lives every strategy the next levels are about to teach you. You're not collected from at $250,000. You remit. The IRS stops reaching into your paycheck and starts waiting for your check. The first quiet sign it sees you as someone who pays, not something it collects. Level 5, $500,000. You're in the top bracket now, the highest number on the published schedule. And this is the level where you learn the published schedule was never the real one. Your CPA, yes, you have a CPA now, not a preparer, explains that what you pay depends less on how much you make than on what kind of money it is. A wage is taxed at the top rate, with payroll taxes stacked on top. A long-term gain on something you held a year is taxed at a different, lower number entirely. Same dollar, different name, different rate. So you start to care about the calendar. You hold instead of sell. You wait the year out. You learn that timing, the one thing the $60,000 wage earner had no control over, is now a lever you pull. The withholding that took first at every level below, automatic, twice a month before you saw it, is gone. What replaces it is choice. A penalty shows up 1 year for underpaying an estimate. Your CPA files a request and it's abated, waived. The courtesy the IRS extends to people who ask the right way. The same penalty that compounds against a frozen refund at the bottom is now just a line you erase with a letter someone writes for you. You're not taxed less at $500,000. You're taxed differently. The IRS looks at a wage and a sale of the same size and sees two different taxpayers, and it has just started letting you decide which one you are. Level 6, $1 million. Here the strangest thing happens, and it runs backwards from everything the wage earner believes. The more you make, the smaller the share you hand over. Not the amount, the share. Because most of your income at $1 million isn't a wage anymore. It's gains, distributions, things that carry the lower rate by design. The $30,000 earner pays a full rate plus payroll tax on every dollar taken first. You pay the gentler rate on most of yours, paid later, on your time. The audit rate at the very top fell for years while you weren't looking. The IRS doesn't have enough people with the skills to audit complex cases like yours. Your return is hundreds of pages. Reviewing it would take a specialist a year. Examining the $30,000 refund took a letter and a weekend. The IRS goes where the math is cheap, and the math is never cheap up here. You don't file your own return. A firm does. You sign where they point. The document is a city of entities, a pass-through, a holding company, a trust with your children's names in it, and each one exists to change what kind of money your money is before it reaches you. You're not paying more at $1 million. Your rate fell. The IRS taxed the first $30,000 you ever earned harder than it taxes your millionth dollar. And it wrote these rules on purpose. Level 7, $4 million. You never speak to the IRS anymore. Your time is too valuable. You wouldn't know the number to call. Your firm speaks to them. Partners who once worked inside the agency, who know the name of the person on the other end, who speak its language because they helped write part of it. When a question comes up about a deal, you don't guess and worry about a threatening letter from the IRS. You ask the IRS in advance. There's a process for it. You describe the transaction, and the agency tells you, in writing, how it will treat your money before you move it. At $30,000, a person waits on hold to dispute a letter no human signed over a refund that's already theirs. At $4 million, you mail the IRS a question, and the IRS answers first, by name, and is held to what it said. The same agency, the same desk, somewhere. It sends the poor a notice and sends you a reply. And here's the thing nobody tells you on the way up. The IRS was never cruel to you when you were broke. It was automated. The letters, the frozen refund, the menu that ended in a tone, none of it was personal because none of it involved a person. An automation aimed at the people who can't answer back looks exactly like cruelty. You're not audited at $4 million. You're negotiated with. The penalty is a line your firm budgets for. The audit is a conversation between professionals that ends in a number years from now. The IRS sends the poor a letter. It sends you a person. Level 8. $10 million. At this level, you stop being subject to the rules because you actually have some influence over them, not you personally. The firms you pay file comment letters when the IRS drafts a new regulation. The associations you fund argue for the reading of a clause that saves people like you a fortune. A provision that should have closed a decade ago is still open because every year someone with your interest pays someone with access to keep it open, and it works. If the IRS disputes a position, you don't fold. You litigate. Years of it. Motions, experts, and the cost of fighting is smaller than the cost of conceding, so you fight, and most of the time, the agency settles for a fraction rather than spend a decade of a specialist's life on one return. The clock that limits how far back they can look becomes a clock you can run out. The penalty becomes a rounding error. The audit becomes a thing that happens to one of your entities and is resolved by people you'll never meet. You are now shaping the reading of the law that once froze a stranger's refund over $1,200 with a letter no human signed. The same agency, the same code. You sit, in effect, on the side of it that writes the footnotes. You're not a taxpayer at $10 million. You're a position the law has learned to accommodate. The IRS doesn't decide what you owe. It receives what you've structured and checks the math. Somewhere right now, someone is checking when the refund lands. It's the biggest check they'll see all year, and it was always their money. Withheld a little at a time, taken first, returned in spring without interest and called a gift. They've already spent it in their head. The back rent, the repair, the month on the card. Then the letter comes. Automated, no name at the bottom. A discrepancy. The refund freezes while a machine that cost the agency almost nothing decides whether to release what is already theirs. They call the number, the menu loops, it ends in a tone. They feel something that isn't anger, just tired. They don't know yet that nothing is broken. The system is doing exactly what it was built to do. Press the poor and wait in writing for the people who are not. The same agency that will one day answer a $10 million client's question before he acts, by name in binding ink, is right now freezing this person's refund over a number they can't dispute with a human. You are the same taxpayer at every income. You earn, you owe, you pay what the code says. The IRS just decides who you are, a refund it's holding, or a position it accommodates, by the number on the last line of your return. The code doesn't change at every level. You don't change at every level. Only the number next to your name does, and the number decides everything.